What if I told you the biggest market crash of the decade might already be in motion right under your nose? In 2025, retail traders aren't just facing normal ups and downs. They're staring down a volatility storm powered by unpredictable interest rates, political upheavals, and tech-driven market manipulation on a scale we've never seen. The old buy the dip playbook? Out. The new reality? Brutal swings, fake rallies, and sudden collapses that can erase months of gains in a single afternoon. Welcome to the Elite Trade Club, where today we reveal your 2025 stock market survival manual, the strategies, warnings, and insider moves you'll need to protect your portfolio when panic takes over. Whether you've been trading for years or are just getting started, this isn't hype. It's the difference between riding the chaos or being crushed by it. Let's begin. This year's market turbulence didn't just appear out of thin air. It's the result of three massive forces colliding at once, each one powerful enough to destabilize portfolios on its own. Combined, they've created the most unpredictable environment retail traders have seen in over a decade. First, political whiplash has returned with full force. The re-election of Donald Trump has triggered a new wave of aggressive trade tariffs. 10% on Chinese imports, 25% on Canadian and Mexican goods. On the surface, it's about protecting U.S. industries. In reality, it's ripping through supply chains, squeezing profit margins, and pushing core inflation up by an estimated 0.8%. This means the Federal Reserve is holding interest rates higher for longer, putting pressure on everything from housing markets to corporate borrowing. The volatility ripple is real. Industrial stocks tied to domestic projects like Sterling Infrastructure, STRL, have soared over 300% since early 2024, while import-heavy sectors like electronics are bleeding capital. Second, AI market disruption has reached a new phase. In 2023, AI was the hot buzzword. Companies added AI to their press releases and watched their stock prices jump. But in 2025, the hype cycle is over. AI isn't a selling point. It's a competitive weapon. Open access models like Deepseek R1 have put institutional-grade AI tools into the hands of anyone, and that means the information edge Wall Street used to guard like gold is shrinking fast. As a result, tech giants in the Magnificent Seven aren't the only game in town anymore. Industrials, logistics, and even mid-tier banks using AI for operational efficiency are quietly outperforming. The S&P 500 minus the big tech names is up 5.8% year-to-date. The message? It's not about who has AI. It's about who uses it better. And third, the bond market's revenge is here. After years of being ignored, bonds are suddenly outperforming expectations. US and UK 10-year government bonds now yield around 4.5 to 4.6%. Inflation-protected TIPS? They're delivering 2.1% real returns, even after adjusting for inflation. For traders willing to dig deeper, some analysts are projecting double-digit annual gains from high-duration TIPS portfolios. While retail chatter is glued to AI stocks and crypto memes, bonds are quietly staging one of their strongest comebacks in decades. The smartest traders are already reallocating before the mainstream catches on. In 2025, the number one reason traders blow up their accounts isn't bad stock picks. It's poor risk management. In a high volatility environment, the first rule is survival. Professional traders live by the 2% rule. Never risk more than 2% of your capital on a single trade. If you've got $10,000 to work with, that's a maximum of $200 per trade. Blow past that limit and you're gambling, not trading. Leverage is another hidden killer this year. With wild price swings, brokers are tightening limits. Most cap leverage at 1 to 30 or less, but elite traders, they're going lower, 10 to 1 or even 5 to 1. Not because they're scared, but because they know in a storm, smaller sales keep you upright. Stop loss placement is equally critical. Emotional stops, where you feel it's safe, are account killers. In 2025, stop losses need to sit exactly where your trade thesis is invalidated, not where it feels comfortable. The moment your setup is broken, you're out. No ego, no, I'll come back. Surviving volatility is one thing. Profiting from it is another. The elite in 2025 are using asymmetric strategies, controlled risks with outsized upside potential. One powerful approach is ICT liquidity sweeps, targeting the fakeouts created by institutional order blocks. AI-powered tools can now detect these patterns in real time, allowing traders to strike where the market makers don't expect retail to bite. Another weapon is volatility harvesting. During calmer periods between political announcements or earnings seasons, volatility contracts. Traders are selling gamma, profiting from time decay in options, and in some cases, automating it with bots from firms like Ellite Trading. And then there's the tips carry trade. Inflation-linked bonds with 2.1% real returns are being paired with leveraged inflation shock plays. Platforms like BlackRock's Aladdin crunch the data to hedge risk while maximizing carry profits. It's old-school fixed income with a 2025 AI twist. Forget needing a six-figure account to trade like a Wall Street pro. Prop firms like FTMO and MyForexFunds are giving retail traders access to institutional-level capital, if they pass strict evaluations. The winning formula? Low-frequency, high-probability setups. The pros aren't hunting for 50 trades a week. They're taking 3 to 5 rock-solid opportunities a month, each with disciplined risk. Once funded, smart traders split capital across multiple firms, avoiding single points of failure. In 2025, you're not just fighting market volatility, you're hedging against platform volatility too. Wall Street's big players aren't reacting to the market, they're engineering it. Jane Street runs ultra-fast ETF arbitrage algorithms, Renaissance Technologies blends dozens of uncorrelated signals for relentless returns, and Jump Trading is pushing quantum computing to test portfolio outcomes in seconds. Retail traders can't match the raw infrastructure, but they can mimic the logic. Arbitrage scanners, sentiment analysis tools like Deepseek R1, and pattern detection platforms like TrendSpider allow smaller players to ride the same trends, just without the billion-dollar data centers. And here's a pro backtesting tip. Include data from chaotic years like 2015 to 2020. That period contains Brexit, COVID, oil crashes, and political shock. If your strategy survives that, it can handle 2025. Discipline beats hype every single time in volatile markets. The top traders in 2025 run their day like a military operation. Pre-market, scan multi-time frame charts, map key liquidity zones, track tariff headlines, and identify fair value gaps. London/New York overlap. Execute only the highest probability setups, preferably automated for speed, but always with human oversight during major political or Fed announcements. Post-market. Review every trade, analyze execution speed, and test strategy tweaks via walk-forward analysis to avoid curve fitting. The goal isn't to trade more, it's to trade better. This year's volatility rewards the traders with the best tools. TrendSpider automates pattern detection, Trade Ideas Holly scans for unusual market activity in real time, and a top-tier MetaTrader 4 VPS ensures your trades execute faster than the competition's. Add in Deepseek R1 for lightning-fast sentiment scanning, and you've got a retail tech stack that rivals mid-tier funds. The cost? Between $250 and $500 a month for a fully optimized setup. The payoff? The difference between being a step ahead or a trade too late. The strategies outlined here aren't theoretical. In 2024, traders with the London kill zone breakout method with a strict 2-to-1 reward-to-risk ratio saw a staggering 90% pass rate for FTMO evaluations. Hybrid portfolios combining passive ETFs with AI-powered swing trades have clocked 15 to 20% returns while keeping drawdowns under 8%. But the lesson is clear. Technology without discipline is dangerous. Even Morgan Stanley learned the hard way when one of their AI systems generated hallucinated trades, earning them a $5 million fine in May 2025. Tools are powerful, but human oversight is irreplaceable. The 2025 market isn't here to coddle you. It's here to test you. The traders who win won't be the fastest or the flashiest. They'll be the most prepared, the most disciplined, and the most adaptable. Because in this new era, it's not the human trader versus AI. It's the AI-augmented trader versus everyone else. So ask yourself, are you prepared for the shock? If you want to stay ahead of the chaos, like this video, drop your thoughts in the comments, and subscribe so you never miss the strategies the average trader doesn't even know exist.